Some important abbreviations for accounts payable. AP Accounts Payable. Arkansas Accounts Receivable. GL General Ledger. PO Purchase Order. IR Invoice Receipt. GR Goods Receipt. BS Balance Sheet. RHC Reduced Hours Compensation. WC Winter Compensation. WCC Winter Compensation Contribution. IF Institute of Finance and Accounts. CFS Cash Flow Statement. LC Letter of Credit. DAP Documents Against Payment. DA Document Against Acceptance. OCR Optical Character Recognition. VAT Value Added Tax. GST Goods and Services Tax. FBT Fringe Benefit Tax. COGS Cost of Goods Sold. GSP Generalized System of Preference. Green Goods Receipt Notes. POD Proof of Order. ECGC Export Credit Guarantee Corporation. EFT Electronic Fund Transfer. ASN Advance Shipment Note. GPM General Purchase Manager. GLP Generally Accepted Accounting Principles. RGA Return Goods Authorization. GPM Gross Processing Manager. RTV Return to Vendor. SOX Sarbanes-Oxley Act. What is accounts payable? Accounts payable (AP) is a short-term liability of an organization. It is also referred to as the department that handles vendor invoices or bills and records the short-term debt in the general ledger (GL). Account payable is defined in Webster's New Universal Unabridged Dictionary as account payable, a liability to a creditor, carried on open account, usually for purchases of goods and services. Some examples of accounts payable are equipment, licensing, transportation and logistics, traveling, power, raw materials, assembling and subcontracting works, fuel deals. What do you know about accounts receivable? Accounts receivable is a current asset account that keeps track of money that third parties owe to you. Again, these third parties can be banks, companies, or even people who borrowed money from you. A common example of accounts receivable is interest receivable that individuals usually get from making investments or putting money into an interest-bearing savings account. What do you know about liability? A liability is an existing debt or obligation of a company. It is an amount owed to a third-party creditor that requires something of value, usually cash, to be transferred to the creditor to settle the debt. Liability equals asset owner's equity. In White v. Green, Justice Robinson of the Supreme Court of Iowa wrote, "Liability, in the legal sense, is the state or condition of one who is under obligation to do at once or at some future time something which may be enforced by action. It may exist without the right of immediate enforcement." International Financial Reporting Standards (IFRS) Framework Definition. A liability is a present obligation of the enterprise arising from past events, the settlement of which is expected to result in an outflow from the enterprise of resources embodying economic benefits. Some examples of liabilities: bank debt, mortgage debt, money owed to suppliers, accounts payable, wages owed, taxes owed. What are current liabilities? Current liabilities, also known as short-term liabilities. Current liabilities are debts that are due within 12 months, or the yearly portion of a long-term debt. Some examples of current liabilities: accounts payable, income taxes payable, interest payable, lease agreement, insurance payable, accrued interest, customer deposits or unearned revenue, notes payable other than bank notes, accrued expenses, payroll taxes payable, dividends payable, bank account overdrafts, short-term notes payable, bank loans, sales taxes payable, wages, current maturities of long-term debt, rental payments. What are non-current liabilities? Non-current liabilities, also known as long-term liabilities. Any financial obligation that takes more than a year to pay back, such as a business loan or mortgage. Some examples of non-current liabilities: mortgage payable, bonds payable, long-term notes payable, deferred tax liabilities, capital leases. What are contingent liabilities? These are liabilities that may or may not arise, depending on a certain event. Or a contingent liability is a liability that may or may not happen. This means there's uncertainty about recording such a liability in the financial accounts. This is because the happening or not happening of a contingent liability is not in the hands of us. Some examples of contingent liabilities are lawsuits, product warranties, bank guarantees, change of government policies, change in foreign exchange, liquidate damages, pending cases, lawsuit for theft of patent know-how. What are assets? An asset is something your company owns that can provide future economic benefits. Assets are part of the accounting equation and the balance sheet, both of which are presented in this format. Total assets equals total liabilities plus equity. Equity means a company's net worth. Some examples of assets are cash, investments, temporary investments, long-term investments, accounts receivable, deferred discounts, warehouses, prepaid expenses, inventory, equipment, machinery, vehicles, real estate, trademarks, franchises, software and hardware, tools, company-owned vehicles, goodwill, land, fixtures, patents, copyrights. What are the different types of assets? Current assets. These types of assets can be readily converted into cash or its equivalent resources. Examples: cash, cash equivalents, short-term deposits, accounts receivables, inventory, stock marketable securities, etc. Fixed assets. These types of assets are not easy to convert into cash or its equivalent kind. Examples: land, machinery, equipment, building, patents, trademarks, etc. Tangible assets. Assets with a physical existence are categorized as tangible assets. Examples: land, machinery, equipment, building, cash, office supplies, inventory, marketable securities, etc. Intangible assets. These assets are economic resources that have no physical presence. Examples: market goodwill, brand, copyrights, corporate intellectual property, patents, permits, trade secrets, licenses, etc. Operating assets. These assets that are required in the daily operation of a business. Examples: cash, machinery, equipment, building, inventory, accounts receivable, patents, goodwill, copyrights, etc. Non-operating assets. These assets that are not required for daily business operations, but can still generate revenue. Examples: short-term investments, marketable securities, vacant land, income generated through fixed deposits, etc. How are assets used in accounting? When company accountants draw up forms, assets are compiled and listed in the balance sheet along with liabilities and equity. What do you know about liquidity? Assets are often grouped based on their liquidity or how quickly the asset can be turned into cash. The most liquid asset on your balance sheet is cash, since it can be used immediately to pay a liability. What happens if I can't clear my accounts payable? According to the general accounting principles, all businesses are supposed to clear accounts payable by the due date as it is their current liabilities. If any business is unable to pay the amount in the short term due to some financial issues, they can talk to their vendor and inform them about the delay in payment. If you have a good relationship with your vendor, they might agree to make the due amount as long-term notes. Some vendors ask for interest payments for all delayed payments. What is accounts payable cycle? Accounts payable cycle is also known as procure to pay. P2P cycle is a series of processes which involves the purchase and payments department of the company and carry all necessary activities from placing an order to suppliers, purchasing goods and making final payments to the suppliers. Accounts payable cycle includes determination of goods required, procurement process, Search for suppliers. Request for proposal. Review receiving quotation. Negotiation. Purchase order. The supplier's confirmation. Supplier's duty. Unsuccessful delivery of goods. Invoice entry. Payment. What is meaning of invoice? Invoice is commercial document issued by vendor to the account payable team of the buyer demanding payment for the goods services delivered. Invoice details, invoice date, invoice number, etc. How many types of invoices are there in accounts payable? Some important invoices are accounts payable. Standard invoice. Credit memo. Debit memo. Mixed invoice. Recurring invoice. Expenses invoice. Retainage release. Withholding tax invoice. Prepayment invoice. Interest invoice. Transportation. Batch invoice. Commercial invoice. Tax invoice. Past due invoice. Pro forma invoice. Final invoice. E-invoice. Can you explain consignment process? In a consignment process, it encompasses the sending of goods from a consignor to a consignee. The person who ships the goods is the consignor, exporter, while the receiver is the consignee, importer. What is the difference between consignor and consignee? Consignor is the owner of the goods, is a person or a company who consigns the goods. The consignor also can be a seller who sells the goods in domestic market. If a consignment is moved to a foreign country, the consignor acts as an exporter or shipper. A consignee is a person or company to whom goods is to be delivered to. Most of the cases, consignee is the buyer of the goods. The stakeholders in the transportation process are the consignee, consignor, and carrier. Can you explain accounts payable team? Accounts payable is the recording and processing of financial transactions relating to procurement and suppliers. The opportunities are varied, with a wide range of roles available. Accounts payable analyst. This role is generally found in an office or a company where payments are received and required to be managed, submitted, reviewed and written for the maintenance of full and binary volumed account records. Accounts payable manager. This role is coordinate the team to ensure invoices are processed accurately and efficiently. Data entry analyst. This role is updating the system as invoices are received. Exceptions analyst. This role is address disputes and payment failure issues. Payments processing analyst. This role is performing the daily payment of invoices. Vendor maintenance analyst. This role is maintaining an accurate supplier database. What does audit accounts payable mean? An accounts payable audit, in simple words, inception, is just a formal, well-organized, and thorough inspection of a business accounts payable records. It can be done by either internal or third-party auditors. Auditing is required in all countries, but the rules for when the audit is required change from country to country. Governments usually require that businesses get audited as soon as they cross a certain revenue threshold. What is the difference between two-way and three-way match? Two-way match, it is used to compare the invoice received from vendor with a purchase order. Three-way match, it is used to match the details purchase order, PO, goods receipt, GR, and invoice document received from vendor. In three-way match, the quantity and price is matched between PO, GR, and invoice received. What is the formula of account payable turnover ratio? Account payable turnover ratio equal to net credit purchases by average accounts payable. Can you define accrual? An accrual is an expense or revenue incurred in a period for which no invoice or payment changed hands by the end of that period. What is aging schedule? It is a tabular representation of all the bills and invoices along with their respective ages, that is the date on which these become due. What is Form GSTR-9? GSRT-9 stands for Goods and Service Tax Return 9. It is an annual or yearly return form that should be filed by GST-registered taxpayers. Can you define working capital? Working capital is also known as net working capital. It is the difference between all the current assets and current liabilities of the company. Formula. Working capital equal to current assets, current liabilities. Can you define bad debit? It is debt that is not likely to be settled either due to failure in repayment by the borrower or due to no action to recover the debt from the collector. Can you define cash flow statement? It is a financial statement that summarizes the amount of cash and cash equivalents entering and leaving a company. What is four-way match? Four-way match equal to PO plus receipt plus invoice plus inspection. What are accounts payable accruals? Accounts payable accruals, a particular kind of expense, requires special attention when readying financial statements for year-end, that is, the end of the fiscal year and other accounting periods. What is interest on capital? Interest on capital is where the extra you receive on the total amount you invest in a business. What are the payment methods? Check. F. Electronic fund transfer. With transfer. Automated clearinghouse. B2B payment. Emburse business credit cards. Clearing. Direct debit. What are the steps considered before making of payment? Need to consider below points before making payment to vendor supplier. First, check the confirmation details. To whom the payment is made to. Payment against which order or bill. To check payment terms and conditions. To check whether payment is due or overdue. Any different charges or taxes to be deducted. Need to check availability of funds in the bank. Payment security or not. Payment through check, NEFT, wire, other. Can you explain TDS? TDS stands for tax deducted at source. It is a concept aimed at collecting tax at every source of income. In a balance sheet, it is shown in the assets section, right after the head current asset. Can you define deferred tax liability? It signifies that a company may pay more tax in the future due to current transactions. What is the use of subsequent debits credits? Subsequent debits credits are used in cases where the quantity is in the original invoices to remain the same. What are the different software for accounts payable? Some most used accounts payable softwares are Bill.com, AnyBill, Oracle NetSuite, BQ eCore, Sage Intacct, Multiview, LB, Acumatica, Artsil, Centriviews, Sage 50 Cloud, MyOb Essentials, Tipplety, QuickBooks, FreshBooks, Beanworks, SAP Concur.
Like, share and comment. Don't forget to click the subscribe button. Click the bell button for latest updates.